What's up, everybody? It's Giunta with Team Take Profits. I'm here to help you trade and get paid. In today's video, we're going to do part 2 of the Divergence series, really helping you to understand RSI Divergence. But before we get to that, I want you to, after this video, I want you to go and check out the poll that we posted. I want you to vote on it. Help me to understand what you think would bring the most value to this channel this year. We're looking at adding a second weekly posting, a second weekly video essentially, and we want to know what you think that should be. A lot of people are asking for a mindset motivation type video, and maybe that's what we do. But I want you to vote. I'm going to leave the poll up for one more week, and then whatever that wins that poll, that's what we're going to do. We're going to add a second video per week to our channel. So make sure you go vote. Let your voice be heard. I want to make sure that this channel adds as much value as possible for you, okay? So now let's get to the video. Divergence part 2. In today's video, we're really gonna look at, in particularly, how divergence works on different time frames and how to precisely get entry and exit in the market. Looking at candlestick patterns, looking at the different ways that candles break down. All of this is going to help you to understand how divergence can be a powerful tool in the Forex market. So let's get to the charts. I'll see you over there. Whenever you have a disagreement in the market that way, that generally, and again, I say this all the time, I'll say it again, we cannot guarantee you a move in the market. We can't tell you that now because you see some change in direction here that, hey, get in and you're going to make $1 million. You know, this is all about high probability setups, right? When we look at divergence, or when we look at any trade setup for that matter, no one is ever going to tell you here, if you get in here, you have a 100% chance of winning. What we're telling you is by using multiple confirmations and by showing things that are common in the markets, we can see where there are high probability trade setups. I would want to get into something that I can have multiple confirmations on, something that is a tried and true method of seeing these potential setups, than just trying to roll the dice and hope for the best, because that's low probability. So divergence is not a guarantee, but divergence is a high probability indication of something that's happening in the market. Why? Because when I see an RSI, or when I see price action that tells me to buy from here to here, but I see RSI, strength in the market, telling me that the market is not as strong as you think it is, essentially something's telling me that very soon this strength is going to run out. It's not going to be able to continue. Without strength, how can this thing keep pushing for a next high? If it doesn't have strength, if it didn't have strength here, how could it continue to push up and up and up? Well, it had strength here. But here, in this section, right, it doesn't have the same level of strength. Suddenly we see it losing strength instead of gaining strength. And now we see, does this thing really have the goods to push up one more time? Well, how do we know then? Well, because look, low, high, low, high, low, high, all the way up, high, low, right? This is our trend line here. Essentially, if this is going to have strength to move up, we're going to come off of here and we're going to push back up, right? We should be able to push back up. But because the market did not have strength, because this currency did not have the strength to keep pushing, then what happens is it actually breaks my trend line. It actually comes through and it breaks out of my trend line, and I have this extremely strong move down. Now, I want to show you something. If you just caught it from there to there, that was 400 pips. 400 pips in less than a week on one trade. Now, this is a swing trade. This is a multiple day trade. This is something you stay in. I'm showing you, though, that this is literally 400 pips. And you say, look, this little bit right here, that's 418 pips. That's a lot of movement. That's a lot of money, right? But we have even further indication that could have helped us get in earlier if we understood. But for the sake of simplicity, let's just say there. If if we know that strength no longer, if we know that the strength is, the RSI is telling us that there is a possibility. I hope you're writing that word down. I hope you're putting it on a sticky note. You know, whatever you got to do to really remember this and to really get a hold of this possibility. What that tells me is when I see the strength go down, but price action going up, I have a strong possibility that when this comes down again for that next retest, it probably doesn't have the strength to push back up again. So I have to wait and see for that pullback. And then right in here, I want to see, does it have the strength to push back up again? In this case, it did not. And look, RSI and price action suddenly match again. You see how this is a stark drop off? From here to here is a stark drop off. From here to here, it literally looks exactly the same. Under, retest, breaks it out, retest, kind of rides, right? So under is same exact thing. Same exact thing. Because that's no longer divergence. Now we have strength into a bearish market. We have bearish strength in the market. We have seller pressure coming into the market, which is pushing the price down, right? So what did I do? I didn't even look at indicators like as far as my Bollinger Bands, EMA. I didn't do any of that. All I did was I notified that I identified that I have a trend. I identified that my RSI matched my trend. Then I identified that I continued a trend and that my RSI no longer matched that trend. Now, because the RSI no longer matches that trend, I'm starting to say, well, I don't want to, that's a good question, Jared, and I'll answer that in a second. I don't want to say, well, since this is showing me a higher low and a high, you know, that's all good. That's one, you know, that's one point of trading. But now suddenly I'm seeing strength losing. I see the market losing strength. I don't want to, at very least, it's a signal to me that maybe I don't want to buy or sell yet, but I probably want to start closing out my bullish positions at least. I probably at least want to close out any buy positions that I have. I probably don't want to buy a position in a divergent market. Does that make sense? I probably don't want to have a continued position when divergence is telling me reversal, right? And I'm not saying jump in as soon as you see divergence, go and sell everything, buy, sell. No, that's not what I'm saying. I'm saying that if you see divergence in the market, there is a strong possibility of a turnaround. So let's start having some caution. Let's start opening our eyes a little bit. Let's start taking a closer look at what's happening in the market to see, is there a possibility of this thing turning around on me, right? And how do I do that? Well, if this is going to be a trend, and I don't want to beat a dead horse here, but I really want to make sure you get this. If this is going to be a trend, then a trend has identification marks, which are, in a bullish case, a low, a high, a higher low, a higher high, a higher low, a higher high. Well, if it's going to be a trend, then it's going to have to continue having higher lows and higher highs. So once I get to my next higher low, let me highlight that for you. Once I get to my next higher low position right here, right? You can't even hardly see that red. No sense in even having it. But when I see that I have my next higher low, then if this is going to continue to be a trend, then I would need another higher high. Well, since this did not bounce off of my trend, but it actually broke lower than my trend, that's telling me everything in me knows at this point, I no longer have a trend. I have a reversal, okay? And so this is no longer the time to try to catch this and move up. This is now time to catch this and move down, right? And how did I know? Now I want to show you how awesome this tool is, right? I want to show you exactly how awesome this is. I'll answer that question too in a minute, Herman. This divergence started to show right here, and it was confirmed right here, because true divergence does not it is not confirmed by one touch. If you have true divergence, it will always be confirmed by 2 touches. Anybody who shows you one little point where it just comes up and touches once and then tries to call it divergence, they're not right. That's not divergence. Okay? True divergence is always confirmed by a second touch, and that's for the support resistance. That's for a EMA retest off of an EMA or a support and resistance. That's anything always requires 2 or more touches, right? So it's the same thing with divergence, right? I have here 1, 2, 1, 2. That shows me true divergence in the market. So when I had confirmed divergence, this is where I was. When it broke my trend line, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days later. Folks, you had 10 days to prepare for this. This is not something that happens and then suddenly, oh man, I got to drop what I'm doing. I was at work and I missed it. No. You had 10 days from the time that divergence was confirmed to the time that you broke your trend line to confirm a position down. You had 10 days. How amazing is that? How amazing is it, the Forex market showing us that we literally could have prepared for this trade for 10 days. That's amazing. So what I'm saying though is, and it's not always 10 days, guys. Don't take me the wrong way. But I'm saying that this particular trade, you had 9 to 10 days to prepare for, okay? In other words, is it always 10 days? No. But once I have confirmed divergence, I should have my eyes on it. Once I have this confirmed divergence, then at least, okay, maybe I don't have 10 days. Maybe I have 2. Maybe I have 1. If you're trading a 4-hour chart, maybe you have 8 hours. Maybe you have 12 hours. I don't know. Here's what I do know is once you have confirmed divergence, now is the time to start taking a look at what that market is doing. It's time to start setting some levels. It's time to look over here and maybe pop a line on the chart, right? Right in here, right? If it's going to come back and pull back, right? That's that next mark. When it's going to come back and pull back, and maybe I drop a line and then say to it, add me an alert on this horizontal line. And I get a little text from TradingView saying, hey, price just hit your line. It's time to start preparing for a move. Listen, if you think for 1 minute, guys, that you're just going to jump into the markets and, every morning you're going to wake up and you're going to have no clue what's going on for the day, and that day you're going to just happen to find a great trade, you are mistaking yourselves. These lines in my chart, look, let me show you some. Can you see my mouse right here? I'm clicking that and dragging. It don't even move. Why? Because I have it locked. Because I have had these lines on my chart for over a year, literally like 16 months. I've had these lines on my chart. I haven't moved these lines. I haven't adjusted these lines. These are lines that I have had on my chart for a while, and I'm just looking at them retesting these same lines over and over and over. The preparation is done. The preparation is there. I know when I start approaching this area, it's time to start looking at a turnaround or a slowdown. I know that I'm probably not going to just go busting through here all the way to the roof. Those lines tell me a lot. I didn't just wake up this morning and say, well, man, look, wow, I didn't even realize we're close to a zone. No. I have been watching these charts. That's why I don't trade 28 pairs. I trade GA and I trade gold because I have 2 eyes. I have one on GA and one on gold, right? I can't watch 28 pairs. What I do is I have these few things that I look at, and I know them like the back of my hand, right? I know what's going on with GA before most people know what's going on with GA, right? Yeah, there is a video in the archives about setting up those lines. Jody, I've set up training for TradingView to have it like yours. Yes, it's on the website, tradinggetpaid.com. Just go into the back office and it's there. And Troyce is laughing with me, liking my two eyes stuff, I guess. So guys, what I'm showing you here is that when we see divergence in the market, that doesn't mean jump into the trade. It means make sure you go back and look at the preparations that we've made in the market, because that is what's going to set us up for excellent trade setups. That's what's going to set us up from low and mid probability to high probability setups. I don't want to take low probability setups. I don't want to take I want to take high probability trade setups in the market. All right, guys, there you have it. Divergence part 2. I hope this video helped you out a lot. I hope this, being kind of let into our sessions and into the classroom, I hope that's helping you to understand what it is that we do and how we are profitable in the Forex market. So divergence is a powerful tool, and I hope that this series is helping you to utilize that. Before we end, don't forget to go vote on that poll. Go vote at the poll. I don't want to sound like a politician, but go vote on the poll, okay? And so also, don't forget to check out the website, check out the social media links, and like, comment, subscribe. I'll see you on the next video.